Trading Nut, episode 199.
The first step I feel like is to keep them from taking the same wrong steps and, mistakes that I did. So that's what I start with. I tell them, like, number one, the easiest way to trade is learning structure first. And once again, I know that structure does not always maintain, blah, blah, blah. But if you can understand structure, just simply understand, don't sell it if you're sitting at a lower low, and don't buy it if you're sitting at a higher high. Till this day, that will be one of the main things that will save you tons of capital spent.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to almost the 200th episode of Trading Nut. Can't believe it. Now, today we've got Ray Vaughn on the show. Now, Ray is a smart money style trader, and he does some ridiculous risk rewards. You're going to find out what they are in the show, along with, well, not as ridiculous as his 2-day profit payout from a prop firm trading challenge. 26K in 2 days from woe to go. This is passing all the challenges, everything. You're going to find out how he did that in the show. Other things about passing funding challenges. If you're looking to automate some of that, then check out my Robot Lab Live. We're in the process of building out a trading robot. We're almost finished the first one. You can still join now and get access to it to try and pass a funding challenge, and then obviously go on and profit and withdraw from it as well. And if you're looking to build your own trading robots, have the skills to turn any trading idea you have into an automated solution, then check out my Robot Builders Club. I teach you how to do that without doing any coding whatsoever. Other things going on here at the channel. If you are interested in coming on the live scalping challenge for London Open, then hit me up at support@tradingnut.com. Let me know you're keen, and we'll get a whole bunch of you together, and we're going to do this live scalping London challenge. Smart Money series is still running, so if you're looking for more smart money education, then that's over there on the Trading Nut YouTube channel as well, with the guys there at Ariel FX. Before and after trade examples on that as well, which is awesome. And live streams hitting the channel every week, so please go and check that out. New traders coming on board pretty much every week. All right, guys, enough from me. Let's get on with the show. All right, folks, here we are on Trading Up. We've got Ray Vaughn in the house. Welcome to the show, Ray.
Hey, thank you. Thank you for having me. I'm excited to be here.
I didn't even actually ask you where you're based. Where are you based at the moment?
I'm actually in California, Southern California right now.
Awesome. Lovely, lovely spots. Now, today we're going to dive into your trading story and find out how you got to where you are now, and also give the guys some advice and insights into their trading, or what they could do with their trading as well. And I know you've been funded a number of times, and you are sort of like almost an expert in getting funded as well. So we'll dive into that as well for all those people interested. So to start off with, how did you get started in trading, and what was your sort of background?
Cool. So yeah, I've been trading for roughly around 7 years now. Before I actually started trading, I was doing music for different TV shows in America, even overseas, like in the UK where you're at as well. And from there, I actually met a good friend of mine, Josh, and he was actually trading on MetaTrader at the time. He showed me the app and was showing he was floating up a couple $100. And I'm like, so we just spent all this time making this music for, maybe $1,000 and, a few royalties, but you just made this on your phone in a couple minutes. It completely blew my mind. So from that point, he basically taught me what he knew. I went through baby pips, and from there, it just took off. Like I spent almost every moment, 12 hours a day, just studying and going over it. So that's how it started. I would say roughly 2.5 years in is when I had that click where it was just like, stop making the same mistakes, stop blowing these accounts, be disciplined. And I feel like I learned enough through that time period to sort of build an actual trading plan. And I think that's what kind of propelled me to where I'm at now.
And so let's dive into those 2.5 years of, like, I suppose, struggle. I mean, can you remember like the worst possible time during that period, and how you sort of structured it around your work and life balance?
Definitely. So I remember there was one period when it was right around the election time and the markets were just sporadic. Like they were going crazy. And I didn't know what I was doing. I had $1,000 account and I literally dropped, I think it was like 2 lots, and I just randomly clicked buy. And I'm just seeing my P&L go from a couple $100 up to negative $300 up to 200, and it's just spiking both ways crazy. That was one of those moments where it was just like, I really felt the first pressures and the emotion of trading. And I'm glad it happened early on in my trading journey because it kind of taught me how dangerous this game could be if you don't know what you're doing. So from that point, throughout the next couple months that I was trading and everything, I feel that it was more so learning how to control the discipline of emotion and lot size and all that kind of stuff. Because when you first start trading, you see a little bit of profit and you're like, oh, well, if I just times 10 my lot size, I could have made this much, and you're always trying to use the grass is greener analogy to, make more money instead of just focusing on what you have and building it up consistently.
Okay. So was there, I suppose, a breaking point where you were like, because obviously at 2.5 years, you sort of, something changed, right? Something changed within you to go, I've got to sort this out. What was sort of like the ebbs and flows to the point where you were like, okay, this has got to change?
Yeah. Honestly, I think it's when your back is up against the wall. I was using a lot of the money I was actually making from my music and I was blowing it, and I was just getting upset and frustrated. And I just told myself, like, if I'm going to continue doing these same things, there's no point in me continuing to trade because I'm literally just wasting my money. And, I felt like I was in a good position. I was grateful for the position I was in with music, but for me to be in that position and literally just throw money in the trash can by me just not being disciplined, it made no sense. So I literally just had like a deep conversation with myself. I remember this day, and I just told myself, like, from this point, you need to make a trading plan and stick to it to the best of your ability. Nobody's perfect, but if we can just, let's say, have 3 to 4 days out of a 5-day trading week that we can stay immensely disciplined and then just take the other days off at first, that's all you need. So at first I was only focused on trading a few days, and then the rest of the week I can do whatever I want outside of it, go have fun, blah, blah, blah. But those 2, 3, whatever I decided back then, that's all I stuck to.
And so I think there's a sort of gulf there in between, like, deciding, right, I'm going to create this trading plan, and then actually actioning the trading plan, which I know, I'm like, I've been susceptible to it as well, not following the trading plan. And I'm sure a lot of listeners out there have as well. So why and what at that point in time allowed you to stick to that plan, and how hard was it?
Yeah, definitely. So it was very, very hard. But I think it was only hard because I wasn't doing other things in my life that made me disciplined. So I started trying to become more of a disciplined person overall than just focusing on discipline and trading. Another thing, I started reading books on self-development, like Think and Grow Rich, and understanding how meditation and visualization and all that kind of stuff works. So I think with putting all that together, I started to build more of I'll say like a detachment from the excitement of trading. And I think that's the biggest thing, is like, if you can detach yourself from the excitement of, I may make this much money today, and treat it more as a job, as in, I show up at this time, I execute, and I leave, and that's it. It changes. So for me, that was, a big moment for myself. It's really hard to say because when you're in that moment, it's like everybody's journey is a little bit different. But I would definitely say meditation, visualization, and just really focusing on a few days a week at first. Because I honestly believe that, have you ever heard that saying, like with billionaires, they only make a few decisions per day?
Yeah. Yep.
And per week as well.
Yeah.
Yeah. So I truly believe that, like, as humans, we have to control ourselves and put the decisions and our execution on certain things in a smaller time frame, because we're not meant to, let's say, trade 7 days a week. We don't have the mental capacity, the mental energy to do that. So we have to cut it down to a smaller amount of time to be able to maximize our ability.
And so can you talk to us about maybe the first day that so you got your plan, you're going into day one of that week and you're like, okay, the plan's in place, I've done the mindset stuff, I'm about to execute it. I mean, how was that different from the prior week or weeks?
I think it was, like I said, that detachment from, like trying to make money. So my goal changed. I'll say that. My goal was instead to focus on the trading plan versus make money.
And was that a profitable week for you?
Yeah, surprisingly it was. And I took the least amount of trades in my trading journey in that week, and it was more profitable.
Hey, it's always the way, isn't it? It's just so ironic. And what were you? What kind of strategy were you applying at that point in time?
So back then, I think I was trading like a Fibonacci strategy where as long as it hits like the 50, 61.8 or 38.2, you're buying a bounce off of it. I don't trade that way anymore, but yeah, that's where I started.
And so like when you were looking for when you were taking profits and, getting losses and stuff during that week, I mean, if we can sort of print out your statement, what would that statement have shown in terms of risk to profit, like risk to reward, and also number of trades, let's say even versus the prior week or weeks? Oh,
man. So let's start with the prior week. Prior week was probably anywhere from 10 to 20 trades in a day. I'm more focused on scalping basically my whole career. So even when I first started, I was always in and out of the market. But once again, this is not how you end up succeeding in the long term. So after I, stuck to my trading plan, I literally would enter one trade a day. And back then I would basically I would discipline myself where knowing that I only have one shot today, if I, blow this shot, I have to leave. I have to come back tomorrow. So I no longer can just sit there and say, oh, I should have done this. I should have done that. It's like, no, do the analysis before, trust yourself and just simply follow it. So I ended up only taking, I believe, 3 trades that week. And they were my biggest winners. I mean, I would say the previous week, anywhere from, if I had a $2,000 account at that time, probably close to blow it,
Right.
The next week, I would say back at that $2,000 point, probably anywhere from a 8 to 10% gain, but disciplined, Yeah. So,
which is quite, I suppose, a swing from blowing an account, which is 100% loss.
Yeah.
And 8 to 10% gain isn't that much on a $2,000 account. Back in the day, I'm guessing there was no prop firms, or the prop firms weren't really that prevalent. So,
yeah.
Okay, right. So, a completely different kind of approach. Now, one of the things that's I think people might be interested in your opinion on is the difference between, and I've had past guests on the show before where they've in fact, it's only one recent one, which was Tom Hugard, where he talked about not restricting the number of trades that you take during the day. In theory, you should be able to carry on trading if you're carrying out the same action plan or your trading plan, because it is essentially it's something you should, there should be no difference, right? Because you should be mentally well enough to be able to take that trade without any emotional, I suppose, disturbance. What's your view on that, given the fact that at that point in time you're I've dropped from 10 to 20 a day to 1 trade a day. Just interested in your view on the difference between taking every single setup and taking just one and going, I'm walking away. If it wins, it wins. If it loses, I'm done.
Definitely. Well, first off, I definitely respect his opinion, and he's a legend himself. So it's I get where he's coming from. I think that's true, but it takes time to develop that level of discipline. So I think when you first start off, you have to start with those small goals, as in, okay, today maybe 1 to 2 trades and just simply follow the plan. But that turns into a month of following a plan, 6 months of following a plan, etc. And you build that habit where it's like second nature. So I believe long term, yes, for sure, you can take as many trades as you want. But I found more success in simply putting it into a small block. You know what I mean? Just 1 to 2 trades, and that's it for myself. And even the members that I train, I've seen a lot of growth and success in the smaller amount of trades put on.
Yeah, it's interesting. It is interesting, and I think it's a good sort of like, I think, yeah, from what Tom has said to what you said, it's the main takeaway for me is it's the stepping stone, right? So you can't dive in at the deep end. You got to go into the shallow end and then work your way up. So that's a nice way to look at it. Now, you talked about scalping there. You were doing scalping, and I actually watched your video I think it was on your website just earlier, and you were talking about how you got stuck in a trade that you couldn't close because of software issues, and you thought, oh well, I'm going to scalp to keep my account in, so I don't break any rules on the drawdown and stuff around the prop firm.
Yeah.
What kind of scalping were you doing? Was it the same kind of scalping that you were talking about here, or was it a completely different approach to scalping?
I would say that scalping, I call that preventative maintenance scalping. But that scalping was different because it came with more skill and understanding of the markets versus when I first started trading. So like the way I overall trade now is scalp entries with intraday targets. So for example, even though I was stuck in that trade, if we drop down to like, let's say the 1 minute, 2 minute time frame, the same exact candlestick patterns, wicks, etc. form. And what I was doing is just taking advantage of those smaller time frame movements from order blocks or engulfing candles. But yeah, that's what I was basically doing.
Right. Okay, cool. And so, okay, let's dive into a bit further on your journey. So you turned the corner, you got disciplined, you obviously found smart money concepts along the way. How did that educational process go?
Yeah, definitely. So honestly, I learned from, I would say, at least 4 or 5 different courses and, YouTube and all that kind of stuff when I was first learning. So I think I started off in, I want to say like Wall Street Academy or something by Q Banks. I think I've seen one of his courses and I think I bought it when I first started there. And then that progressed to meeting people in that group. And from there, we kind of started our own little niche group inside of that, and we would share concepts. And I met somebody that was really, really good at swing trading, but I don't have the patience for it at times to just see my P&L fluctuating like that and still, let's say 2 days down the line, end up taking a loss. So he taught me how to read structure very well. I could analyze structure like nothing else, but it was just the holding of the trade for me. So what I ended up doing was combining my friend's methodology with the lower time frames, like the 1 minute, 5 minute, etc., to kind of like formulate what made sense to me. And throughout that process, it was just refining over and over. And yeah, I mean, I'm pretty sure I came across the concepts on YouTube. It's surprising too. Like I've been seeing a lot of comments on my videos as well from somebody named ICT or his students.
Yeah.
And I honestly never learned from him, but he has a lot of great concepts out there based around smart money. So yeah, for anybody out there trying to learn now, that's a good resource as well.
So you're sort of like, you've just come up with your own way to do smart money concept style kind of trading that may or may not reflect, well, it probably doesn't reflect what ICT does, who's been on the show before, to the letter, but it obviously works.
Correct, yeah.
I mean, what were the sort of key elements in your discovery that got you to the point where it was like, these are key to making the smart money concept stuff work versus, if it didn't have them, then it's probably not going to be as effective. Like if you just traded order blocks only, which are like, that sort of last candle before the big push, you're not going to win that often, or you may not even make money. But there's obviously something in there that solidified it for you. Can you explain what that is?
Yeah, so I think honestly, you start to realize that a lot of concepts out there for trading are majority the same. Like I know a lot of people might be mad at me for this, but if you find an impulse-legged structure and you're waiting for a retracement back to, let's say for Fibonacci traders, it would be back past 78.6. For order block traders, it would be the order block that created the impulse. For supply and demand traders, it would be the wick, highlighting the zone from there. But it's all relatively the same thing. And I started realizing that at I'll say 3.5, 4 years in. And once I did that, basically, I just started combining everything I saw on the chart. So from what I understood from Wix. I have something that I call the Wick algo. I don't know if it's been out there before, but basically in an impulse leg, there's a way to kind of have confidence in holding a trade longer. So there's certain concepts that I'll go over with you once we do the video later. But I would say overall, it's just like building up confluence and understanding that if the majority of traders are seeing something happening at a level, let's say that we're at an impulse high, we see a huge candle, mass psychology is going to want to enter there, so it's going to cause a reversal and trap those traders. So it's like you start to think of things backwards from what the mass does, and you see those candlesticks forming that tell you what I would say the institutional money is doing. So yeah, it's hard to explain in words. I would be better showing it.
Yeah, we'll have a look on the video. So guys, do remember, go and check that out. There will be a link under this one to find it. Now, do you want to give the listeners some, I suppose actually, before we dive into your trading here and now, what about like moving into the prop firm world? And I mean, what stage were you at when you, I suppose, gave up on music? And I don't know if you've given up on music, but where you sort of put music to one side and trading was going to be your main source of income. What was the sort of turning point for that? Was it the prop firms or was it not?
Honestly, it was before the prop firms. I was able to make pretty good money before the prop firms from saving up from the music and, other things. So luckily I was able to actually get good returns on my money. But honestly, I would say the main thing that transitioned me over to trading full time was the fact that when I had to make music, I had to sell them to companies like Sony or Warner Music. And when you love something, like when it's your passion and you have to sell it, it comes with critiques. It comes with, well, can you change this? Can you change that? And the work became just far too much for what the compensation was. And, when it's your passion, you love something, it's like you don't really want to continue changing your art or, destroying it in a way because you're the musician, they're not. So that was a big thing for me. And I already knew how to trade. I already had capital saved up and I had consistent returns. So I was like, hey, I need to put all of my focus in one thing. So yeah, I did put music on the back burner. Yeah, but that was before prop firms.
And what was that transition like, moving into trading? Because I suppose with music, I'm guessing you're probably dealing with a lot of people, band members, or unless you did it all yourself, to an environment where you are literally, you're on your own trading unless you had a community. I mean, how did that transition happen?
Honestly, I would say it went pretty smoothly. I've always been an entrepreneur spirit, so I've always been kind of like the lone wolf. So even with music, I mainly made beats. So I would make beats and send them out to get, vocals put over them. They would send it back. I would mix it, and then I'll send it to the company. So the workflow was very similar as, with trading. I'm just at home by myself, wake up at a certain time, analyze the charts, put in the trades, etc. So the transition wasn't honestly that hard.
And what did your trading day look like back then, or even now?
So trading day, I would say, started at like 4 a.m. So for me, New York session starts at 5 a.m. PST here. So I have to be up at 4 a.m. to get ready for that. And then I would basically trade for about 2 to 3 hours. So from like 5 a.m. to 8 a.m. And then after that time is when I would start the studying. So I would just literally study until I got tired and passed out. So literally 12 hours of studying, probably like 2 to 3 hours of trading.
Wow. Yeah, and it seems, I mean, I just interviewed someone else yesterday or the day before, and they were saying the same kind of thing. Like a lot of it is studying and work and very little trading. Now, what about the prop firm transition? I mean, was this just something to do? Because it sounds like you were, at that point, pretty successful in what you were doing. Was it just like, hey, look, let's give it a go kind of thing? Or what was the thinking around this?
Definitely. Well, honestly, I feel like I kind of talked about this earlier, but I feel like prop firms are giving opportunity to people who may not have a certain amount of capital. And if we think about it, I mean, I was 20, 21 at the time. So, you're still trying to save up capital, get a car, get all this stuff, pay this, pay that. So it's hard to save up 20, 30, 40, $50,000, especially to put at risk in an account. You know what I mean? So being able to, go with a prop firm that's offering 100K, if you can pass this two-phase challenge, it just made way more sense. Even if I did have, capital saved up on my own, it was like, now I'm only risking $500 and I get a refund plus payouts in the future for it. So that was kind of my thought process behind that. And once I started, it just took off. And I always tell like the people I work with too, like my students, you have to prepare before the opportunity comes, because I was already studying. I was already spending 12 hours, 14 hours on the charts a day for years before I even discovered prop firms. So when they came around, I was already ready to take advantage of them.
Because you've had some quite crazy gains or I suppose qualification times around these prop firms. Can you let the guys know what's the craziest you've managed to achieve?
Yeah, so we'll go all the way back to around the Funding Talent time. Now, Funding Talent was a company, a prop firm that was around a couple years ago. I would say like 2 to 3 years ago. But they changed the game of prop firms because of the fact that they no longer made you wait a day or longer to get your phase 2 credentials. So they basically cut it out where you can literally get them as soon as you pass. So what I was doing back then is in a 24-hour period, I would pass both phase 1 and phase 2. I would literally, it was crazy. And then they would pay out on the 15th. So I remember there was this crazy time where I took a new challenge on the 13th. I passed phase 1 and phase 2 on the 13th, got the credentials for the live account on the 14th, made $26,000 that day, and then got the payout.
Ridiculous. Yeah. And so how were you able to achieve that sort of two-phase verification? Was it one trade that you were doing that was high risk to reward, or how did you do it?
So going back to how I trade like scalp entry. So my stop losses can be anywhere from 1 to 5 pips on average. Sometimes they go a little bit bigger. I would say like 6 to 7 pips, but I try to keep it down to around 1 to 5. So this allows you to maximize your reward. For example, for 1 to 3, all I need is 15 pips. And, a move on an intraday scale can go anywhere from, let's say, 30 to 60 pips. If I'm able to catch an impulse like that, I'm catching 10, 20% on one trade. So usually it would take around 2 trades. And from there, yeah.
So sorry, my cat just threw up on the hallway there. And I missed that. Did you? What was the risk on the trade?
1%.
1%. Okay, right. And you're pretty confident that So if you lose one, then the second one you will most likely get that and win. Your 20% on the account easily.
Oh yeah, because basically they would give you like, let's say, a drawdown limit of 6% per day. So I understood. Okay, like, I'm going to treat this just like I treated my trading plan with my personal capital, as in I'm going to trade 1%, and my main targets are 1 to 3s. So I tell everybody, like, just go for a 1 to 3 and take partials or something at least. It's very easy to become profitable just taking profits at 1 to 3. But once you get better, that's when you can hold for the extended target. So for me, that's what I kind of did. And with the small stop losses, you're catching an impulse news coming out at New York Session Open. It's a no-brainer.
Yeah. That's really cool. That's fantastic. And so from those prop firms, do you carry on trading with them, or are you like, now I don't really need them kind of position?
So it's a mixture. Unfortunately, Funding Talent went out of business, so that kind of shut that one down. But there's tons of options out there right now. I'm funded with my Forex funds and the Funded Trader currently. And FTMO is another good one. I did have issues with them before, but they seem like they, fixed all of that and everything. So, yeah.
Okay, so you still use them. Now, what about like your trading these days? So how many days a week are you trading? What's the average number of trades you'll take during the course of a week?
Got you. So honestly, yeah, I trade every day now. And I actually have a live trade room where I trade my students every day from 5 to 7 a.m. But I would say on average, I limit myself to 2 to 3 positions per day. If I take a win, I'm done for the day. If I take a loss, I'll give myself usually just one more shot. Depending on the market conditions, I might give myself, a third shot. If I notice that we're in consolidation for the day, it's no point in wasting an extra 1% on a trade. But let's say that, we get a retest back to a level and the wick just barely taps us out. Maybe I'll give another shot to that. So I would say roughly in a week, 2 times 5, so 10 to 15 trades per week.
Okay, so what about your average sort of win rate and risk to reward ratio on those trades?
Definitely. So of course it varies. I would say anywhere from the low side on the win ratio could be anywhere around like 45%, all the way up to months where I've had 75 and 80%. As far as my risk to reward, I go for the 1 to 3s. So that's my first take profit, depending on the market conditions and how strong I feel about the impulse that we're currently catching. We'll go for extended targets, and that's when we can go for the extended 1 to 8s, 1 to 10s and all that. But what I tried to do with how I teach others is like make it realistic, as in you're not always going to catch the crazy risk to rewards, So going for a 1 to 3 is way more logical and profitable.
And so what about your back testing for this strategy? I mean, how much back testing did you have to do? Do you still do it? What did that look like?
So much. Like literally, like I said, 12 to 18 hours a day for like 5 years. So I just started to make folders. And what I would do is I would go on the chart and highlight specific times of day. Like let's say Asian session start, New York session start, and London session start. I understood that those are when the most momentum comes into the market. Now I would backtest how long the impulses lasted from those sessions. I would backtest what caused the transition. Were there bearish order blocks, bullish order blocks? Was it a lot of exhaustion or liquidity? Just literally everything. I would question everything. And then I'll keep a folder on my computer with screenshots and, notes next to it. So I would say that helped me more than anything else because it gave you something to reference on current market conditions.
And so were the screenshots like, 5,000 screenshots, or was it more like here's 7 screenshots of different market conditions that I know, I can sort of go, okay, well, that's one condition, that's another.
Honestly, I would go with the thousands.
Oh, seriously? Okay.
Yeah.
And
I would just cycle through them because I feel like although, yes, you could pick like, let's say 7 setups, you'll start to notice if you take, let's say thousands once again, if you take thousands of those pictures, you'll start to notice certain characteristics of days, weeks, pairs, and you start to become more familiar with it. So
now I know you've got like a thriving community over there. I mean, the guys that are coming through now, how do they, obviously, I think they're probably going to be joining up with you to save themselves having to do 12 hours a day for 5 years. How do you get them to that point where this stuff becomes, they get confident in it and they can execute at a level, similar to you?
The first step I feel like is to keep them from taking the same wrong steps and, mistakes that I did. So that's what I start with. I tell them like, number one, the easiest way to trade is learning structure first. And once again, I know that structure does not always maintain, blah, blah, blah. But if you can understand structure, just simply understand, don't sell it if you're sitting at a lower low and don't buy it if you're sitting at a higher high. Till this day, that will be one of the main things that will save you tons of capital spent on useless trades. So once you can get that out of your system, it's like, okay, understand that the market gives you multiple opportunities to get in on it. And that's where like the understanding of smart money and order blocks come into play, because I see the order blocks in the market almost like building blocks. So almost how Legos stack, that's how order blocks stack in the market. And they give you retests over and over and over to get in on it. So once you understand that concept and understand, like, let's say you miss an entry on the 5-minute, simply go up to the 15-minute and you'll find an entry there off of a retest. So it's more so teaching them the fundamentals of how the market works, how it operates, the algorithm behind it. And then from there, it becomes simple. All you have to do is flow with it.
And what timeframes are you typically entering trades on?
I always use either the 1, 2, or 3 minute. Yeah.
And what markets are you covering?
Only Euro USD.
Only one market? Really? Only one market?
Yeah.
I should have found that out before I interviewed you. And so how does that play out with like other clients of yours that are wanting to trade other markets? Do they have the same? Do they do that, and do they have the same results, or how does that work?
Interesting enough, like the whole group trades different pairs. A lot of people that want to, just follow my footsteps exactly, they'll go with Euro USD. But honestly, they can trade any pair. I just tell them to stick to one, because what happens is, especially early in your journey, you hear about correlation. And then all of a sudden you think you're a master trader. You're like, well, if Euro's going up, that must mean USD JPY is going down. So I'm going to do this and that. You end up risking so much more money, blowing so many more accounts. So what I tell them is just stick to one. That way you have one directional bias. And no matter what market condition it enters, you have a better chance of actually being profitable.
Mm. And why did you pick that one market in particular?
It was multiple things. So I started on that pair number one. It also has one of the lowest spreads available on any broker. When you trade it on prop firms, it literally bounces around like 0 to 0.1 pips, which means if I'm using a small stop loss of, let's say, 5 pips and the market starts retracing, I still have basically my whole stop loss versus, let's say you trade GBP JPY, 2.2 pip spread, right? So your 5 pip stop loss is really only like 2.8.
Mm.
So being able to maximize my use of the lower time frames with my small stop losses, Euro just made sense.
Yeah, it's interesting. And it does make sense for the prop firms as well, for the low spreads. So what about, like, if you think back to the beginning, what do you think made you different from everyone else out there who's, dived into trading?
Man, I think, like I said, it was like the entrepreneur spirit, because I brought it over to trading from the music and, everything else I was doing. I always owned my own business. So I've never had to actually like work a normal job. I'm very grateful, for that. But I also understand the struggle that a lot of others go through from that. But I think it was like the discipline of understanding that every day that I wake up, no matter what I do, it's on me. As in, like, nobody's going to help me. Nobody's going to pay my bills. No one's going to force me to, do the right thing today. So it's like I had to develop a character and a discipline to be able to do the things I needed to do every single day. And that carried over very easily, I would say, into trading. And from there, it just took off.
And what about, like, I suppose if you flip the script and somebody who has got a day job, they are working, and they obviously come through as a client of yours, what do you sort of say to them, and how do you get them to the point where, this becomes a part of their life and normal for them to succeed?
Definitely. I would say, number one, everything has pros and cons. So having a job is good because it gives you some kind of income at the moment, but it also, locks up your time a little bit. So depending on where you live, depending on your time zone, it could, create a conflict with when you want to trade. So that's the biggest thing is I would tell them, if you can't actually trade at your job when you need to, either try to find a new position or do something where it's not correlated to like so much structure. For an example, I know people that I've told to, do Instacart or something like that we have in America, which is like delivering food or groceries, and they can make a killing. They can make 6 figures a year doing this, but it's on their schedule. So instead of, having to work a 9 to 5, they can go trade in the morning from 5 to 8 and then go head out and work, until however long they want to for that night and still make good capital. So that would definitely be one of the things I say. And then also use the job as motivation, as in understand the structure, how it works, understand, the people at the top, the levels of discipline they have to maintain the structure of that business. Learn as much as you can, because every business, for the most part, has similarities. And even with trading, it's the same thing. So if you work in sales or you work in management, it's going to come down to the bottom line, as in how much money is coming in and how much is going out. So with trading, going back to why I trade Euro, paying less per pip on spread is helping me keep more money in. Understanding how, I'll say like understanding how money goes out, as in you're paying your broker, the fees, the spread, all that, commissions, understanding that is going to help you in the long run as well. Maybe not at first, but as you get bigger and you start trading with, let's say, a 100K account, that's going to turn into thousands in fees and commissions that can be eaten up. So just overall understanding that your environment is always helping you get to that next level.
Now, I know I watched some of your videos, as I mentioned earlier on, and I saw you had something in there about meditation, and I'm guessing that's one of your mindset kind of techniques. Have you got any other mindset techniques along with that you can share with the listeners today?
Definitely. So I kind of made my own meditation style for trading. That was one of the biggest things that I struggled with, because I understood the benefits of meditation. Makes you calmer, makes you more relaxed, makes you more present, all that good stuff. And there was a lot of information on the internet about awareness with trading, right? But it didn't really teach you how to do it. So I ended up actually getting a life coach a couple of years back, and the life coach taught me these meditation practices, but taught me how to visualize trading success. And this is something that I teach my students as well, but you can actually visualize yourself with the winning feeling of taking that trade, holding that position, because that's another thing. It's even though you take the correct trade, you have to be able to manage it correctly, right? You have to be able to control your emotions, etc. So that was the next step, is if you visualize yourself watching the candlesticks form, watching the market pull back towards your entry and being calm and collected, it becomes easier, because what we visualize, your brain can't tell the difference. So you're building new memories and new neural pathways to actually help you in the future.
That's very interesting, because that's exactly what Tom Hugard was talking about when I interviewed him. Exact same process I think he takes before the trading session. And now I think about it, it ties into what Mark Douglas had in the Trading in the Zone book around, you need to, one of the key things was going into it with a winning mindset, right? So this is giving you that winning mindset, whereas if you go into it thinking, well, could be a losing day, well, that's definitely not a winning mindset. So very interesting. So do you teach this to your members?
Yeah, 100%.
Oh, awesome.
And we have certain meditations that we actually created. Some of them have my voice, some of them don't, but they just guide you through it. But yeah, we've seen a lot of benefits in our community from it.
And how hard was it to do the meditation and to get to a point where you were quite confident, and well, not confident, but just so where it was working for you, or you felt, that it was working?
Got you. So I recommend a book named Psycho-Cybernetics by Maxwell Maltz.
Yeah.
That book is amazing. And that's kind of the structure I followed as well. And he talks about how around the 2-week to 3-week period is when you'll start to see subtle changes. And that's when I noticed my impulses to just enter the market or just be a part of the market disappeared. And it was more so me focused on only participating when I felt my setup was present, versus, just trying to enter at any moment. And you just, it's you get addicted to it and you just want to always be a part of the market. But I felt like it took a step back. And when I looked at the markets, it was more so of looking at it as in, okay, this is a job. I don't have to participate. I'm only going to participate when it meets, my trading plan, my confluences, and then just simply flow with that.
Yeah, it's interesting. I've listened to that book on Audible years ago. In fact,
my favorite book.
Yeah, it was awesome. I think I even listened to it twice, but I can't remember anything about meditation in there. So
he focused more on, he called it self-hypnosis and visualization, right. But he talked about several studies. One of them was that a professional golfer used visualization to practice for his games or tournaments, and he wouldn't practice actually on the courts. He would only practice mentally. And he's seen 34% increases in his abilities to be able to, win these tournaments and all kind of stuff. Same thing for basketball players, et cetera. So it basically teaches you that mentally training for anything actually trains just as much or even more than if you do it physically.
Yeah. Right. Let's dive into the last question before we get the quickfire round done.
Sure.
Now, what about so we've talked about quite a few things here, and it's all been awesome. What one thing would you recommend somebody would go away and spend the next month mastering to try and get to the point where they flip an account from being not negative to a profitable, let's call it a trading week or a trading month?
And that's a good one. If I had to choose just one, I would say definitely start to understand how supply and demand works in the market. If you can understand that, everything else will make sense. You understand that basically, if you want to call it institutional money, smart money, whatever you want to call it, but all that's happening is that money is entering the market at specific levels and then impulsing price down, and then money's coming in once again and impulsing price up. If you can understand these levels in the market and trade from one to the other, it becomes very simple. Right. So I would say definitely focus on supply and demand, which in my opinion is very similar to whether you want to call it order blocks and the highs and lows of impulse legs of structure.
Right. Interesting take on it. Yeah. Now, right, let's jump into the quick fire round. So how long did it take you to go from newbie to consistently profitable?
I would say right around 2.5 to 3 years.
What's your favorite entry setup?
Ooh. I would say a higher time frame order block, such as like on the H1, retesting the base candle, which is like the smaller candle in the engulfing pattern. So at that point, I would like to see on the 1 minute a break of structure and a retest and an engulfing form on that right side. And yeah, that would be my favorite entry.
Rewind that, guys. You'll be able to understand if you draw it up on a chart or have a look. What about strategies? What strategies do you use to exit or manage trades?
So like I said, my first take profit is the 1 to 3 risk reward. I usually take profit at least 33% of my entry and then move to break even. So that basically allows me to walk away with something. If you're trading with the prop firm, 100K, 1% risk, that's $333 that you already, locked in. Or I'm sorry, actually $1,000 that you already locked in. So no worries on it. From that point, I'll go for extended targets based off of liquidity.
Righty-ho. What's your recommended trading book or resource?
Definitely anything Mark Douglas. So The Disciplined Trader, Trading in the Zone. Trading Beyond the Matrix is another good one. I forgot the author's name, or Van Tharp, actually, Dr. Van Tharp. But he has another good one, Psycho-Cybernetics by Maxwell Maltz, and of course, like Think and Grow Rich.
Now, if you could leave our listeners with one piece of advice, what would it be?
I know it's going to sound cliche, but just never give up on yourself. Understand that anything you perceive as possible will become possible and will become your reality. So just simply focus on the end goal and start creating your future towards it.
Brilliant. Awesome stuff. Well, look, before we wrap up, what's the best way for the traders to get hold of you?
Definitely. You can find me on Instagram at RayVaughnFX. The website is tgfx-academy.com. And you can also find over 100 and I believe like 20 videos on YouTube at Technical Gods.
Brilliant. Look, a big thank you to Ray for sharing with us today. Everything we've discussed here, along with all those links he just mentioned, are in the show notes. To find them, simply search for Ray in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. All right, folks, there you have it. Interview done with Ray. Now, we did shoot a video after this where he shows a trade that one of his clients took and made a ridiculous 40K on a prop, I think it was a prop challenge or it was either a prop withdrawal for the day. It was done in about like 1 minute as well. So guys, you got to go and check the video out. Links will be in the show notes. They'll also be on the YouTube channel as well. Do remember other things to go and check out whilst you're clicking around. Robot Lab Live, Robot Builders Club, the Scalping Challenge. Email me, support@tradingnut.com. The Smart Money series, a new Smart Money series over there with the team at Aerial FX on the Trading Nut YouTube channel and the other live streams. Hit subscribe, hit like, and click on that notifications bell on YouTube so that you don't miss them. And we'll see you next week in episode 200.